Let's have another quick look at how the markets on Bay Street and Wall Street are trading right now. The TSX still down from Thursday's record high close. US stocks slipping, Nvidia and Advanced Micro among the shares weighing on the market. Here's an intriguing one. Kohl's Corporation stock jumping, but there's a suggestion that it may simply have become a meme stock. Of course, it's an American department store chain with apparently almost 1,200 locations in every state except Hawaii. According to Bloomberg, it has emerged as the newest meme stock. There's been a bunch of mentions by retail traders on social media. At one point, the shares more than doubled when the market opened. The stock was briefly halted and then gave up some gains, but still up more than 30%. One market watcher talking to Bloomberg said, quote, "It's all social media chatter. Remember that the highlight of the meme stock area was a dose of nostalgia for companies like GameStop and AMC." And so Kohl's kind of undignified becoming a meme stock. BMO says the number of new motor vehicles assembled in Canada hit its lowest level in more than 2 years last month. And ominously, Canada's share of North American production dropped to only 7.6% in Q2, matching the lowest level in more than 30 years of comparable data. We're joined by Douglas Porter, Chief Economist at BMO Financial Group. Douglas, thanks very much indeed for joining us. It sounds bad. Part of it, though, apparently is because of plant shutdowns in a transition to new models.
Yeah, it is. And if you look at it longer term, I mean, the reason why we're producing at about half the share that we did, say, 10 or 15 years ago, a lot of that's a story of increased production in Mexico. But there's no question that overall auto production, if we look at the bigger picture in Canada, has been slowly but surely declining over the decades. In fact, we peaked all the way back in the late 1990s, early 2000s, when at one point Canada was producing more than 3 million vehicles a year. Now we're down to, in the last 12 months, about 1.3 million. There are some tariff-related issues here. You know, we have seen some sporadic shutdowns of various lines and some temporary plant closures. But it is really part of a longer-term piece of declining auto production in Canada.
Just to be super gloomy, are we done? Or is production just going to relentlessly move south of the border? President Trump being the latest catalyst, trying to get all manufacturing into America.
Well, we'll have to see. We'll have to see exactly what kind of deal we can, we can work out with the U.S. in the next couple of years. I would say if we're faced with a 25% tariff on autos, that is very difficult for the auto sector to deal with. It would really almost have to become a domestically oriented business, which is where we were before the auto pact way back in the 60s, but that is not efficient. And, I could see, if we were faced with a long-standing tariff of 25%, there may be only a few choice plants that would actually be able to continue in that kind of environment.
Let's move on to something maybe a little more cheerful. We've heard a lot about the taco market. Trump always chickens out. You've got the sushi market for us. Remind us what SUSHI stands for, please.
Well, in my view, it's stocks usually stop having interest in events or issues that don't directly affect earnings. And what we've seen is just this remarkable, I would say, almost a lack of response now among financial markets to any new news on trade. I mean, you can often get like a 1 hour or 1 day pullback in the equity market if we get some negative news on the trade front, but it's nothing close to the kind of dramatic pullback we saw in April. And to many, to some extent, the market has become desensitized to trade news. And it's fascinating to me because arguably it looks like we're going to end up in a worse position than we were back on so-called Liberation Day back in early April. In other words, the kind of reciprocal tariffs we're looking at are actually higher in some cases than what we were looking at back in early April. And the markets have yawned to it largely. We've hit record highs in a variety of indices in recent days. So definitely the markets have have learned to live with the trade war.
And you say, you touch on this, the U.S. economy has been remarkably strong, given all that we've heard about companies maybe deferring investment plans or trade chains disrupted. The U.S. data has held up.
Oh, it definitely has. And I would say probably, the area that most were focused on is what kind of impact this might have on U.S. consumers. And, what did U.S. retail sales do in June? They just kept on keeping on. And, if you take out some of the more volatile items, U.S. retail spending is up about 4.5% from a year ago, well above inflation. And, there's actually been remarkably little damage to the U.S. consumer. Clearly the U.S. economy was not growing particularly strongly in the first half of the year. It's probably going to average growth of about 1% or so. But I would say overall, the global economy, the U.S. economy, have been quite resilient to the trade war. Now, it might just be a case of you got to give it time. There's definitely going to be a chill on business investment, and we may not have seen anything close to the full pass-through of the tariffs yet. But I would say so far, whether you look at inflation or growth, the impact of the trade war has been pretty mild so far globally.
But the downside is the Fed might not even cut this year.
That's possible. So we're looking for 2 cuts from the Fed in September and December. But no, it is a possibility that the Fed will sit out this year if they get it all disturbed by the inflation readings we see in the months ahead as the tariffs bite a little bit more deeply. It's possible that the Bank of Canada might not cut rates through the remainder of this year. Actually, the markets only have less than 1 cut priced in at this point. Our view is still we are going to see some economic effect from the tariffs, and we're likely to see both the Fed and the Bank of Canada eventually get back to trimming rates again.